Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Monday, February 25th. The new week began like the prior week ended, which is to say news regarding the bond insurers sparked another afternoon rally effort that led to substantive gains for the major indices. Briefly, news crossed the wires around 2:30 p.m. Eastern Time that Standard & Poor's took MBIA off credit watch and assigned a negative outlook. Additionally, the ratings agency affirmed the AAA financial strength rating of Ambac Financial, yet said the company remains on credit watch with negative implications. The decision by Standard & Poor's not to downgrade the ratings at this time helped mitigate some of the worst fears about the potential for a wave of counterparty-related write-downs at financial companies. This development still does not qualify as an all-clear signal regarding the issues facing the bond insurers, but it is certainly the type of news that creates a sense that things are headed in the right direction. Fittingly, the 10-year Treasury note sold off in response, while the financial sector, which was down as much as 1.8% earlier in the day, led the rally effort and ended up 1.2% for the session. Prior to the late-day fireworks, the stock market was trading close to unchanged, with participants lacking any real conviction on either the buy side or the sell side, despite some M&A activity that included a $2 billion offer from Electronic Arts to acquire Take-Two Interactive, and a $2.4 billion private equity buyout of Getty Images. Worries about deteriorating earnings prospects for the financial sector that were touched off by estimate cuts and downgrades for several companies in the space cast a pall on the proceedings. Goldman Sachs was a focal point in this respect after the Wall Street Journal published a cautious-sounding article on its diminished earnings power. Speaking of diminished earnings power, home improvement retailer Lowe's reported a 33% decline in fourth quarter net earnings and provided a fiscal 2008 EPS outlook of $1.50 to $1.58 that marks a 17% decline at the midpoint from fiscal 2007. The stock of Lowe's held up well in Monday's trading, though, on the notion that the worst of its earnings difficulties has already been priced into the stock. Separately, its stock also garnered support from a better-than-expected existing home sales report for January. Shortly after the start of trading, it was reported that existing home sales dipped just 0.4% to an annual rate of 4.89 million, which is a 9-year low. Economists were expecting a 1.8% decline. The inventory of unsold homes rose to 10.3 months versus 9.7 months in December, which is a clear sign that the housing market is still quite weak. Nevertheless, the upside surprise in January provided a modicum of hope that the market is beginning to bottom. The latter view gave the broader market a bit of a boost for a time, but the bounce was short-lived and it looked as if the indices might limp into the close. Then the bond insurer news hit and the market's mood was again lifted. Today's advance marked the best percentage gains for the Dow and S&P this month. I'm Pat O'Hare for Briefing.com. Thanks for listening and have a good evening.